Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend, Gary Wagner, the editor of goldforecast.com. Gary, welcome back.
Thanks so much for having me. Great to be here.
Yeah, it's always a pleasure having you come down to Wall Street Silver. Your insight is really valuable to us. I wanted to get you on and talk about gold, silver, all the exciting moves that's been happening lately. First thing, where do you see gold and silver going from now to the end of 2024? Do you see it going higher, leveling off? What do you see?
I've done an outlook for 2024 year end in gold. And I think we're right now, if we're looking short term, we've had gold under pressure and silver moving somewhat higher. I'm a little bit more bullish short term on silver than gold. With the last FOMC meeting, I don't think traders have digested the fact that they actually were accommodative by reducing the balance sheet reduction. They were taking, I think, 95 billion off a month. They reduced it by 30, and that's 30 billion more per month that stays in the monetary system.
Wow.
And that's where it's the first accommodative move they've met. Powell was a little accommodative, but of course you had one member yesterday come out, and he's a real hawk, but he's not a voting member, by the way. And he said that it's not restrictive enough. Susan Collins came out today and said that their current monetary policy is good. So you're getting mixed messages from the Fed, which is not unusual because you've got doves and hawks. But market participants are having a tough time with it because all of us are unclear as to how many rate cuts will come out of this year by the Federal Reserve. It was three. Now people are under the assumption that it's one or two cuts of 0.25%. And so without clarity in that, it's really set in motion a dichotomy between gold and silver. We've
Right.
seen silver move down consistently, but I mean, gold, excuse me, gold move down consistently, but silver actually find a base at about, this is the July futures at about 26.33
Mm-hmm.
and move up off of that. It's sitting above 27.50 right now. And gold gave up about $7 in trading today,
Right.
and it's about at the same place in Australia. So you've got a real dichotomy this week, and I think it's that gold is much more sensitive to what the Federal Reserve does, where the industrial usage of silver has really kind of kicked in, and you do have the U.S. equities moving higher. They were lower today, but they've been higher for the better part of this week and last week. And so you're seeing silver kind of find a base and move up, gold continuing to trade lower. That's my short-term estimate. Long term, there's so many variables in long
Yeah.
term. What's going to happen in Israel? Are they actually going to do a campaign? And it's a very dangerous one that the United States is against. In fact, they stopped sending missiles and other military equipment to Israel because they don't want them to proceed. But if they do, we don't know what's going to come out of that. We do not know what's going to come out of the Russian-Ukraine conflict.
Yeah.
If any of those widen into a more uh, a wider conflict involving more players, let's say, that could send these metals spiraling to the upside. If hopefully by chance some kind of peace agreement's reached in Israel and some settlement happens in Ukraine, although they're so diametrically opposed in terms of their goals that I don't see that occurring. And there's no one really pressuring Russia to stop their invasion. So they'll
Right.
continue, and they've got more armament, more military assets than Ukraine does. And so at best, Ukraine can kind of try to even the playing field, but it's a very difficult situation. And that to me is the biggest variable. The second one is inflation.
Yeah.
Inflation is coming hot pretty much for the better part of this year. And because of that, it is causing the Federal Reserve to rethink their plans to cut rates. If inflation will get the CPI on the 15th of the month, so about a week from now,
Mm-hmm.
and if that comes out hot, again, above expectations, that's the key, it really could set in motion some bearish sentiment in gold continued, and maybe bearish sentiment in silver, depending on what the stock market does and the industrial complex that utilizes silver. End of year, I easily think gold, depending on the situation I mentioned,
Right.
could breach the all-time record highs. But if things kind of calm down, it's really dependent on that and inflation. And since I don't know what the future is going to bring, I have technical charts with my expected moves.
Yeah, let me pull that one of these up now. I'm pulling up the silver charts. What are you seeing here now, Gary? Like, do you see that? Like, I know you already mentioned that silver long term and short term, your explanation, but what do you see here on the charts that you sent me?
Well, what I see is that we had a recent sell-off. Silver at the beginning, first week of April, challenged $30 on an intraday basis, not on a closing basis. On a closing basis, just above 29, 29.25.
Right.
Then it sold off hard. And the interesting thing is, when silver sells off, it sells off violently. We had a 5% drawdown, sideways trading action. Then we had a 3% drawdown that was late last week. And from there, it had lows that came in at around 26.33 and a half cents. $26.33 and a half cents, and it's moved higher back above 27.50. And that's why I'm bullish short term on silver, because it did find support and it comes in at a 50% retracement. The retracement is from February, when silver was trading at approximately 22.50
Right.
up to about $30. So that's the fib retracement, and it has sold off about half of that move up, that which was a really strong rally, moving from 22 and a half to challenge $30. And
Right.
then when it retraced or corrected, it gave back about 50% of those gains. And that's a very acceptable correction. And it's trading off that. Of course, any of these reports could change that. But for right now, I am more bullish on silver short term than gold.
Now, I wanted to talk to you about even the commercial real estate. There's been so many headlines this week alone talking about how badly in trouble these banks are. You see, even Bank of America is underwater, and but it's not obviously shown on their books yet. But they have so many losses in commercial real estate, in bad investments, and then of course the high interest rates now.
Right.
When do you see that coming into play? Do you think that will be the catalyst to make the Fed reduce rates, and then that will take the whole market down? What do you see happening?
It certainly, I believe, because I don't know what the Federal Reserve officials are thinking, but I
Right.
believe it is weighing on their decision process. The real estate holdings by banks are huge, but it's not banks across the board. I believe it's just a handful of banks with, as you mentioned, B of A being one of the larger shareholders. Add to that, there is what they're calling a phantom or ghost debt that's building, and that is consumers buying on these offers for buy now, pay later, where they have
Right.
low payments throughout, and that debt is really unrecorded, and there's a huge amount building there. So a combination of the two is certainly troublesome. Will it cause the Federal Reserve to act sooner than later? My sense is that the reason they reduced their balance sheet reduction, in other words, they were extremely aggressive. When you reduce by 90 billion per month, you're
Right.
just shrinking the money supply. That's extremely hawkish. That's extremely restrictive, more restrictive each month. So they paused raising rates, but they continued to suck dry the balance sheet and reduce it at a stellar rate, greater than we've seen them do. I don't know if it's in history, but at least over the last decade.
Yeah.
And at the FOMC meeting last week, they announced a reduction by a third. And while they're still reducing it, they're not reducing it as much. And that's actually an accommodative tool. I don't think it's really hit retail investors yet, but that's the first step that they've actually taken to
Right.
be more accommodative by reducing it. If they would stop the reduction, that would be extremely accommodative. But It's the only way that the Federal Reserve, without cutting rates, can change the disposition. So they're continuing to keep a lot of money in the money supply. And by doing that, it allows a lot of free cash flow, and it's supportive of the banks. And I believe that that's why they did that. Because if they kept shrinking at that level, it's going to really come in and hurt the banks because, as you said, they've got huge amounts of non-performing loans out on huge real estate holdings. I don't even
Yeah.
want to quote it, but it's very, very large.
Hmm.
And that is going to definitely bite someone in the butt, so to speak, but it hasn't come to a head yet, is all we can say.
Do you
That
think that
problem is persistent, but no
absolutely?
real reaction. But I do think that's one of the reasons the Fed changed or revised the balance sheet reduction.
Absolutely. And do you think that looking at like the central banks in their mind, they see commercial real estate, they see geopolitical tensions, they see everything going on. Do you think, Gary, that the reason why central banks are buying so much gold and at a record pace, because they know the house of cards is going to fall apart soon, they know the US dollar is going down? What do you think?
Well, I think central banks have been aggressively buying gold for well over a year, according to the World Gold Council, in
Right.
record amounts. I look at it this way. If you're holding large holdings of US dollar, euros, or other currencies, the only thing that it can do is in terms of its buying power, not the dollar index as it relates to other currencies, but
Right.
how much that dollar buys, how much of those wages are able to fulfill the bill obligation of a consumer
Hmm.
is going down. In the same way, if you're sitting with billions or trillions in the case of the central banks, US dollars, they're becoming less valuable. Literally, they can't go up. They
Yeah.
can only go down. So by taking those dollars and moving them into gold, they're in essence stopping the bleeding on that part of their assets.
Yeah.
So it is definitely a signal that the central banks realized that the currencies are on a race to zero, let's say. They
Hmm.
continue to print money. In the case of the United States, we've got $30 trillion in debt, and that is part and parcel from that money in the money supply and the fact that the dollar buys less now because they printed more of them than the Treasury could actually accommodate.
Right.
China is really been aggressive. They've been first and foremost in terms of the amount of gold. I think they reported they bought an additional 60 tons last month. They continue to buy aggressively. The United States has the largest holdings still, but you've got India and China and Poland. Those are the three top countries buying gold, but they've all been liquidating paper money for gold, just as your subscribers have been doing. They've been liquidating their dollars for silver. They're doing something that's no different than what the silver stackers are doing or
Right.
investors accumulating and adding to their portfolio of not hard currency, but hard assets in the terms of gold or silver. And it doesn't surprise me because these people they understand what's happening
Right.
with fiat currency, probably better than we do. And so by moving assets from paper currency to gold is an exceedingly smart move because it stops the bleeding on the amount of dollars or yens or euros or Chinese yuan that they have in their central bank assets
Right.
into something that should hold value rather than decline. And currencies has because they're fiat and because countries keep printing presses busy, let's just say they keep printing more money, there is no chance that those currencies will buy more in the future than less.
Yeah, no,
And
it's
that's
very
it.
crazy. You absolutely nailed it, Gary. There's so many variables too that can happen. It could be commercial real estate. Shoot, next week they could be threatening nukes all over again, and yeah, you never know what could happen. Uh,
Yeah.
but I'm super grateful for you coming down to Wall Street Silver. It's been such a pleasure. Where can people connect with you, and where can they find your stuff?
You can always go to thegoldforecast.com. That is our website. It offers a free trial, and then you can view our premium service. The gold forecast on YouTube has all of our old videos. If you want to see what we've done in the past, I believe there's about well over 3,000 videos. And those are the two primary places to get information. Start at our website, read the information. If it interests you, you can sign up for the trial. It's free for 14 days and see if it makes sense to continue. If not, you send us an email and you never get billed.
Awesome. Well, it's such a huge pleasure, Gary, having you on. And of course, as always, I'd love to have you back on.
Great to be here. And as always, I'll be back when you write me.
Awesome. Talk to you soon, Gary.